Get started talking about building your trading plan. Now, tonight in our class, I'm going to use the term security, but I might use the term stocks, or I might say cryptocurrency, or I might say Bitcoin, I might say the euro, I might say Apple. But I don't mean any one of those specific instruments. I'm talking generally because all of these investment concepts we're going to talk about fit any publicly traded financial instrument. I also going to mix up the term investing and trading. Typically, an investor takes a longer term position, while a trader takes a much shorter term position. In any case, the basic concepts and techniques are equally adept. Now, building your own trading plan is the only way that you're going to become a successful trader. Now, we're not talking about strategy here. Don't mix it up with building or developing a trading strategy. A trading strategy is only one of the maybe called chapters in your trading plan. Now, a trading plan is where you put all of your trading rules. Basically, it's your trading Bible. There is no such thing as the ultimate trading plan because there are no two exactly the same traders. And every trader has a different trading style, a different strategy, has different risk levels, and different market experience. It's always better to develop one's own personalized trading plan and modify it as your experience grows. Now, sometimes there's a misconception that you need a highly involved market knowledge and years of trading experience to be successful. However, you don't. Basically, you need to develop your risk management, your money management rules, learn how to keep your emotions out of the market, because basically everybody gets involved in this technical analysis, fundamental analysis, and trading. Basically, those can only filter out and give you the high probability trades. Okay. The rest is what makes you a successful trader, because no matter what indicators you use, no matter what strategy you use, no matter what scanners you're going to use, you're only going to pick so many winning trades. You're going to have a lot more losing trades than you're going to have winning trades. So the whole idea is to be able to keep your emotions out of the market, not do crazy things, and limit your risk. If you can have, say, out of 10 out of every trade, you're going to lose money. But if 8 of those trades you lose $50 a trade, you've lost yourself what? $400. But out of your 2 winning trades, if you make $700, you netted $300 more. So you made profit. So the whole thing is stacking or moving the odds in your favor. And this is done through a very detailed guide. Now, if you don't know where you're going, any road will get you there. In trading, if you don't set out a plan for your trades and develop strategies to follow, you will have no way to measure your success. You also have no way to get to where you want to go. The vast majority of people do not trade to a plan. So it's no mystery why they lose money. Trading with a plan is comparable to building a business. We are never going to be able to beat the market. In general, it's not about winning or losing. It's about being profitable overall. Now, I'm going to share a quick little presentation with you, and then we're going to talk about the downloads I've.
Throughout your Forex trading journey, you will have both ups and downs. It's easy to get distracted by the different trading methods out there, so you need to make sure you have a trading plan that you stick to, whatever the circumstances. Here are our 5 golden rules for building a successful trading plan. Golden rule number 1 is to keep it simple. You don't need to be a quant, creating complicated algorithms or game theory scenarios for every single trade you place. Simply Find a strategy that is straightforward and easy to execute for your particular risk tolerance and trading objectives. Secondly, do your research. By watching this video, you're moving in the right direction. But the more you research the markets and news flow, the more fluent you will become in understanding what makes currencies move, increasing your chances of identifying trading opportunities. Third, be realistic with your goals. Simply stating that you want to double or triple your initial deposit is not enough. Learn to understand risk and reward per trade. Successful traders often have a profit and loss goal on entering each trade. Also, make sure you manage your risk. Work out how much risk is acceptable to you and take it from there. Ensure you're aware of the risk management tools available to you on your platform. Finally, keep a trading journal. It may seem silly, but your emotions affect your trading decisions.
So think of your trading plan as a checklist. Now, most of you are going to think I'm crazy. Most of you can say this is just a waste of my time. Okay, most of you can say this is too much work. But the fact remains is a trading plan should be thought of as a template for trading the markets. Perhaps an even better way to describe a trading plan is that it's a checklist. This checklist will contain each aspect of making a trade in a logical step-by-step sequence that acts as your objective guide to trading the markets. In essence, your trading plan will state your overall short and long-term goals as a trader and provide you with a checklist of how to achieve them. Now, when trading, as in most endeavors, it's important to start at the end and work backwards to create your trading plan. Now, you don't need to create this huge monstrosity. Okay, you can start out very, very small and keep adding to it. So you start out with whatever strategy, whatever decision-making guide you have. How are you deciding to make your trades? Okay. Hopefully you're not just going and picking, I like that, I like that, I like that. You have some type of strategy. Well, write it down. Because you know what? When you write it down and put it in a step-by-step process, you're going to realize, oh, it doesn't make sense, or I missed a step, or you know what? I didn't really define this. When you actually physically write it down, you find out that you start filling in the blanks. And this is only your trading strategy, not your trading plan. You know, when the price bounces off the trend line and hits an area of support, or bounces off a resistance level and moves back up and is staying above a trend line, I have a positive trend, and volume is starting to increase, and MACD has climbed above whatever, I'm going to enter a long position. Okay. Well, fine. That's your strategy. Doesn't have to be complex. Okay. But then, how do you decide exactly what price you're going to enter the market? How do you decide how you're going to put your risk reward ratio? How do you project what your target price is going to be and what your loss ratio or what your risk could be? And then how do you decide where your stop loss should go and where you have to put your stop loss based on your risk reward ratio? Because basically all you're doing at this point is filtering trades. You're filtering out all the garbage. So the only trades that follow through your entire trading plan, guess what? Are those high probability success trades. And not only do you have the asset you decide to trade, you've now decided what direction. Okay, that's not hard. But you've already calculated where you're going to put your entry point, where you're going to put your stop loss, where you're going to put your take profit. So you've now figured out everything you needed to figure out about your entire trade. Now, a plan helps you maintain discipline as a trader. It should help you trade consistently, manage your emotions, and even help you improve your trading strategy. It's important to use your plan. Many people make the mistake of spending all of their time creating a plan, but they never actually implement it. Now, what components can go in your plan? Now, everybody asks me, can you give us a, can you give us a guide? Can you give us a form? Can you give us some computerized plan like you have a business plan and we can fill in the blanks? Unfortunately, there isn't one. If you search the whole entire internet, you're going to find a million articles on developing a trading plan. You're not going to find any format. If I search now and asked how to put a business plan in, I can type in there how to put up a business plan to open a gym, and I'm going to get a whole detailed structure. If I put in there how to open a business plan or build a trading plan, I'm going to get a whole bunch of articles, but no instruction, because it's all completely personalized. But there's pieces that fit up in your trading plan. Okay, but because it's personal. But your trading plan structure and monetary goals, you have research and education, because all of this is part of your trading plan. How many days a week are you going to trade? But how many days are you going to spend doing some research? How often are you going to trade? And how often are you going to take classes? And how often are you going to read books? Okay. All of this is part of, because a trading plan is not executing a trade. It's your whole entire Bible. Because what happens is, especially today with online trading, I see way too many traders that every time I talk to them and they say, can you help me with something? And I'll go look in their account and they've got 10 active trades. And this week alone, they've made 42 trades. And guess what? They work a full-time job and have a wife and 2 kids, and they still manage to get that many trades in. Well, that's impossible, because you know what? How many hours did you spend analyzing that trade? How many hours did you spend researching that trade? Most of our work in trading, and if you think of it as work, this is a part-time job. Most of it is not the execution of the trade. It is the analysis before the trade and the analysis after a trade. Now, if you stop and think about it, if you were a pro ball player, say a pro US football player, guess what? You're getting paid millions and millions and millions of dollars. But you're on that field every day, not just on Sunday when you're playing the game. You're on the field and you're learning plays. You're learning a playbook. You're learning the execution of your play. Then you're practicing, and then you're doing scrimmages, and you are out there every day. Then you're spending hours, at the film library watching your opponents, watching the plays they exercise, watching how they defend, what their offense is, so that you're all ready for that one little 3-hour game on Sunday. Now, if somebody who's getting paid millions of dollars, $20, $30 million a year, has to do this every day and learn every play and every playbook and spend hours researching for that one little game on Sunday, how come you don't have to do that? So the question is, where do I start? So you should begin your trading plan with your trading strategy. That's it. And work out from there. You can keep your trading plan and your trading Bible, your trading journal doesn't have to be all that big. You keep adding on to it. The longer you trade, the more you add into it. The more, one day you start out with one strategy. Down the road, you might have 6 strategies. As money increases, you might be changing your risk-reward ratio. You might be changing the ways that you pick your stop loss and you take profits. As you get more experience, you can write more detail. So if you're trading price action setups or off key structure levels or structured trading or advanced patterns, then you should put them in first. This will start acting as a blueprint for what you need to do each time you interact with the markets. You firstly need to backtest all of your strategies in order to find out whether they have positive expectancy, simply put, making money or not. In addition to your strategies, you need to put all your risk tolerance and your money management rules in. And this is, and I keep saying this, and money management, risk management are the key. They are so important in our trading that it's more important than strategy. Because you know what? If you can guess 50-50 which asset to trade and which directions go, well, if you're using the right risk tolerance, right leverage, the right money management, guess what? You probably end up being successful. So if I were to ask, sorry about that, if I were to ask 100 traders to send me their trading plan, we're talking about traders who have been trading for years. Guess what? I probably wouldn't get one. In fact, in all of these years that I've been teaching, which is over 12 now, and all these years I've been trading, I've never seen somebody else's trading plan. I've never had a student come to this class who down the road 6 months from now sent me their trading plan and said, can you make some notes on this, or how can I fix it? Nothing. So if I were to ask 100 traders to send me a copy of their trading plan, I guarantee it would be the highest rejection level of it in my life. Because unlike business owners who generally have a business plan in order to provide a strategic vision and stay focused on their business line, most traders never take the time to create a business, aka a trading plan. And if you think of this as a business, so let's talk about it. You decide you want to open a retail store, crazy person, but a retail store in the mall. Okay. You have a good idea. You've got a good eye for fashion. You've got a good eye for this, and you want to open something to sell women's clothes. I don't know why, but you want to sell women's clothes. So you've saved yourself $50,000. But you know that's not going to be enough. That's going to barely pay for inventory. So you need, you figure generally in your head, you need a $200,000 to get the store open and running, stocky and the legal stuff and the first month's rent, last month's rent, all the fixtures, the signs. Okay. So you go to a couple of buddies, you say something to them, and one buddy says, I can put up $10,000. Another buddy says, you know what, I can do 25. I trust you. You make sense. You're not going to take advantage. Your parents say, you know what, we'll give you 50,000. So you know what, you've raised about almost the 200,000 you need. They've all pledged it to you, but none of them are going to hand you that money without something in writing. They want to see a plan. What's the name of your store going to be? What are you going to stock in it? How much money do you actually need for inventory? Okay, how much do you need to build out the fixtures, and how much fixtures? How much for electronics? How many computers? How many registers you need? Okay, how much is a lease going to cost you? How much is insurance going to cost you? Well, first you came up with a one pager, you got them interested. Now they want 20 pager. They want to start seeing numbers. They want to start seeing what the return on investment, what the feasibility, because before they write you these checks, they want to understand what they're getting. But you also haven't told them what percentage of the business you're going to get. You have to now get the lawyers to draw up contracts. You have to say to your parents, okay, I'll give you 18% of the business. You have to say to your best buddy, I'll give you 4%. Okay, when am I going to get the returns? How are we going to have corporate meetings? We're going to have once a month meeting. You're going to send us financial statements every month. What are you doing here? What are we getting involved? Well, if you have to do all this to open a mall, shop in the mall, before you even got the money, don't you think you have to do this much work to take your $5 or $10 or $20,000 to start trading? Okay, now you've gone one step farther. You gotten this part put together, and you go to the real estate company who owns the mall and says, I'd like to rent that space. They said, well, how much space do you need? They said, okay, well, these are our rules. You got to be open this many hours, this many days. You got to maintain this insurance. This is what your monthly rental will be. This is what your upkeep is going to be. This is the kind of insurance you have to have. These are the hours you must be open. These are our rules. But before we're going to let you have that space, it's a very valuable space. Okay? We need to know what type of advertising you're going to do, what type of frontage you're going to have, what type of turnover you're going to have, what type of footstep. Because most of the malls, they rent you for a very low rent. They want part of your turnover. They want part of your profits. They want you to be profitable. They want numbers. Well, they want a little bit more cash, though, than you thought you'd have to come up with. Now you get the bank, because your creditors, will loan you some money. The creditors will advance you some little bits, but you can't bring in all that if you find out the inventory is going to have to be $200,000. Well, you only raised 200. So now you need to go to the bank. Well, the bank says, we want details. We want numbers. We want spreadsheets. We want to know everything. Okay. Now you start putting a real business plan together. Okay. This is no different than trading. But the thing is, once you've got this business plan, now you start opening up the shop. Well, how do you know how many people you got to hire? How do you know what salaries you're going to pay now? And what are you going to do when you hire 3 girls who work different shifts? 2 of them quit the same day. What are you going to do to keep the store open? How are you going to keep track of, what, that pink blouse sold really well, but that yellow blouse isn't selling so well? But I don't realize that I'm selling lots more larges and extra larges and very little smalls, and I've got an out of balance inventory with too much stuff sitting in the back room, but I have to reorder this and reorder that. Yeah, inventory control computers, fine. It's going to tell you what you're doing, but how do you do your analysis? How do you know the guy at the end of the mall isn't selling the same pink blouse for $2 less than you're selling it for? This is analysis. This is comparison. This is the work involved in doing your trading. So in most lines of business, time is a main driver for evaluating performance, because time, you're paying rent every day, you're paying payroll every day. You got customers coming in the store, they don't have the right stuff, they're not buying. Okay, if you're not ready for Christmas and the Christmas season, you have to buy, in September, you didn't buy it at the right time, so it's not coming in because everybody's sold out. You've missed it. Time is important, but it isn't in trading. Time is irrelevant in the world of trading. Trading is one of the few areas in this realm where the space-time continuum has no relevance, because you have no cost for trading. You put that money in your account and it could sit there forever. It doesn't cost you any money. And there's always, always, always trading opportunities. So you actually have all the time in the world right now to start building this plan, to spend your time building it, because guess what? You're not losing one penny. And eventually it's going to make you more money. So a lot of us just don't like doing this stuff. But if you're like the ball player, his reward is what? His reward comes Sunday afternoon when they win that game. So all of that week's hard work got paid off on Sunday. You want to trade 40 times this week and get paid off every time, but you don't want to get paid off because you don't want to do any of the work. So if you figure you spend all week long practicing, scrimmaging, reading, learning to do one trade, well, hey, that guy's getting 10 million, 20 million bucks a year. But what do they spend most time doing? Evaluating their performance. I don't know many traders that actually sit back and evaluate their performance. They look at how much money is in their account. That's the only evaluation they did. But one of the things you put in your trading plan is how you're going to evaluate your performance. Now, for me, I have a strict rule. After every 10 trades, I stop trading until I've put all of my trades into my trading journal. I've evaluated all those trades. I've seen how I'm doing. I make my notes, because just because I have $200 more in my account, or $400 more in my account, or $1,000 more in my account doesn't mean that I did a good job. It means I made some profit, but it means I could have made profit by being lucky. So for me, my number is 10. You can pick your own number. Pick 42 if you want. But this applies to both my swing trades and my day trading. On the average, it'll take me about 3 months to place 10 swing trades. That means every 3 months I stop and do my evaluation. For day trading, it takes me about 4 days to place 10 trades. That means after 4 days, the 5th day of the week, I rest. I do my evaluation. So I only mentioned the time element so you can see how long it takes me to place the number of trades based on my trading style. But you can perform the same math in your head. So what is the number of trades you'll be evaluating before your trading activity? Now, how are you going to evaluate it? Okay. Now, I believe in the keep it simple method. Okay. Don't make it complicated. Just be able to sit down and take a look at it. I use that strategy. I entered here, I exit there. Yes, I made profit, but the trade didn't do what I thought it was going to do. So I need to tweak that trade. These 3 trades were losing trades, but I got out at my stop losses. I minimized my loss. Therefore, those were good trades. Even though they're losing trades, they were still good trades. Now, since I've been teaching, now, most of you know 45 years ago now, I was an agricultural trader. I traded nothing but on the commodities board, and I traded only agriculturals. Today, we have these online platforms, a CF3 trade, that offers us thousands of assets. And I'll talk to somebody who said, well, you know what? I made that trade on Facebook yesterday and I didn't make any money, but today I traded oil and I did fairly good. And yesterday I bought a little bit of Bitcoin. I said, what the hell are you talking about? You're all over the place. Nobody can be an expert in all those assets. Can't be. It's impossible. You couldn't spend the time researching, the time doing the analysis on all of those charts, the time understanding the intricacies of all of those assets. So one of the things your trading plan builds into it is, what assets will you trade? You know what? If you just trade the euro and the crosses, the pound, the euro Japanese yen, the euro Swiss franc, the euro dollar, okay, you could stay busy the rest of your life. I basically, for many years, traded only 2 things: orange juice and coffee. That was it. Okay. Because remember, goals are very important, and so are plans. Because a goal without a plan is just a wish. Okay. Now, you also need to have many different trading strategies, because not all of them are going to work right for all assets. And you don't have to have complicated ones. You could simply use a moving average crossover strategy because all you're trying to do is get a clue on what asset to buy or sell. You can limit it. You say, if an asset isn't trending in a direct uptrend, I'm not even interested in it today. Okay. So if I can't put a trend line on there, I'm not trading it. Okay. I'm only going to trade an asset that's above a major support level and moving towards a resistance level. Make it simple, but have several different plans because you can use different ones for different assets or different time. But don't make it complicated. Now, I have a set of rules that I keep in that's part of my trading book that has nothing to do with whether I'm making a trade or not. Every morning, and part of my trading plan is what do I do to prepare for the day? What do I do for my the first thing I do is I go to my 6 assets that I do trade. I check my levels of support and resistance. I verify my trend line. I check the economics counter. I mark on my charts what major events are about to happen because I don't want to make a mistake and execute a trade without seeing that Mario Draghi is making a speech that may send the euro up and down, may cause volatility for a half hour. Won't affect what the euro is going to be at 3 o'clock. Only for the half hour he's speaking. Well, if I didn't adjust my stop loss for that, or I didn't say, well, you know what? I'll wait till after speech before I make this trade. I can make mistakes. So I decide what I need to do every day. Then I have a set rule of how I'm going to place my stop losses, how much I'm going to risk per trade. Okay, where am I going to place my stop losses? Okay, and this is crucial. This is important in your plan. Not where do I have to put my stop loss based on my risk reward ratios. How am I going to determine where my stop loss should be based on certain technical aspects? So that you always decide where you have to put your stop loss. Then you apply your risk reward ratio, your risk management. Say, I can't reach that goal, so therefore I'm not going to make that trade. You also have to have your exit rules. Now, I have a set of rules. I always set my exit strategy before I enter a trade. I always put my take profit point. But I also use a trailing stop. And as the asset moves in my favor, I'll even close half my position, take the profit sometimes. It depends on what I want to do at that precise day with that asset. But it's determined before I open that trade. But the exit strategy should be as simple as when the asset crosses below a moving average or when an indicator moves into an overbought oversold, I'm going to close my position. Now, another important part of your trading plan is how much money can I use per trade? Okay. Period, the end. How much money can I use per trade? And I've seen guys that open a trade for $200 and then have a $2,000 trade and have a $500 trade all over the place. Okay. How much will you make or use per trade? And how much will you have invested in the market at any one time? Will you allow yourself to have 5 open trades, each for $1,000 a piece, open at the current time simultaneously? You decide how much do you want to have, because you know what? One freaky, crazy thing in the market could turn all of those winning trades into losing trades in seconds. Okay, how many open trades are you willing to wait? Then once you got all that, you've actually started your trading. You need to stay in control. So it's when will you take a break? Now, a break isn't a holiday. It's not a vacation. A break is after so many trades, I'm just going to close my computer. I'm going to close my account, not my physical close it down, but I'm going to close my, my platform. I'm going to close my computer. And for one day, I'm not going to look at anything in the market. Okay. I'm just going to watch basketball on Tuesday. I'm going to go to the beach. I'm going to do my job, but I'm not looking at the markets because what you're doing is you're showing that you're in control. By forcing yourself to take that break, The self-imposed break gives you back your discipline and you're exercising control over the markets. So the markets don't sweep you away. Because on top of that is, when do you walk away from your computer? Okay. I have a firm rule. If I start the day out and I have a very, very good trade, and I make a good trade and I make a lot of money, and I'm not talking about $1 million, I'm talking about if I make $1,000, on the first trade of the morning, guess what? Close my computer, take the rest of the day off. Not spending the money. Because also, if I have a couple bad trades and I've lost some money, close my computer, do the same thing. Because your emotional state, your frame of mind can affect the way you trade. Because what happens is, when you've had a good trade, first thing in the trade in the morning, you tend to get cocky. And you end up putting the money back in. It's like Las Vegas. You win big at the casino. Before you go home from your vacation, you put most of the money back. Because instead of making those, you move from the 5-cent slot machine over to the $5 slot machine. Same thing when you've had a very bad trade or a couple bad trades. Walk away. Because otherwise you're going to tend to get mad, and the madness flows into your trading, flows into your decision-making capabilities, flows in everything. Even if you follow your plan, being in a bad mood just tends to follow you along. So I've given you tonight, if you look on your screen, I've given you 3 handouts. Okay. The first one is the best I've been able to put together for you on how to build a trading plan. I put together 2 different trading plans and given it to you this handout. Okay. I've tried to give you step by step what to build into, how to start, some kind of a guide to get you off on the right foot. Okay. So if you click on the little download button on your screen, you can download it now, because you can't access it at a later time or in the recorded version. I've also given you the trading guide from investing.com, which will help you a little bit with your strategies. And I've also given you a little guide on what you need to know before you start trading. And that'll help you a little bit more understand risk, reward, and money management rules, because you need to incorporate that. And maybe you can copy some paragraphs directly out of those into your plan, or get some guidance. Okay, because it's very important, because I want you to start off on the right foot. Okay, and this will get you on the right foot. If you get yourself more used to getting involved in your trading plan, your analysis, your research, your practice, your scrimmages, your rehearsal, to get that gratification when you do make the trade, you'll find the trading can be very enjoyable. I enjoy more talking about trading than I do trading. So your successful trade, again, think of that football player. Think of that the pro tennis player. Think of Tiger Woods. Look what he just did last week. He won the Masters after being out of contention for so many years at his age. But how much time and how much effort and how much practice, and he had to know every lay of every land, every strategy, everything he had to do to win his $2 million and come back out on top. It's a lot of work. That's what it's all about. But that reward is where it all comes from. So thank you very much for joining us tonight. And again, if you have any questions, if you contact Legacy FX, they'll be glad to help you out step by step along the way. Have a great week, and thank you for joining us. Good night now.